Welcome back to the channel. Let's talk about a number that defies human scale. $650 billion. In 2026 alone, just 4 major tech giants are projected to spend that exact amount building new data centers to fuel the artificial intelligence revolution. To put $650 billion into perspective, if you stack that amount in $100 bills, the pile would rise 710 kilometers into space, clearing the orbit of the International Space Station by over 300 kilometers. By 2030, tech companies want to scale that spending to a staggering $9 trillion. But behind the press releases and the skyrocketing stock prices, a bizarre reality is unfolding. Nearly half of the data centers planned to open in the United States this year have already been delayed or canceled outright. According to Bloomberg, around 140 data center projects representing 12 gigawatts of computing power, enough to power 9 million homes, were supposed to launch this year. The reality? Only a third are actually under construction. The rest exist purely on paper. Even the facilities being built face unprecedented delays. Tech giants publicly deny the bottlenecks, but satellite imagery reveals the truth. Take Microsoft. Not a single one of their highly publicized data centers announced since 2023 has broken ground and finished on schedule. One major project, claimed to be fully operational, isn't even half complete. We are witnessing one of the strangest disconnects in economic history. Capital is flowing at an unprecedented rate, yet the physical infrastructure of the AI boom is stalling out before it can even be built. When the AI boom exploded into public consciousness in late 2022, it triggered a frenzied corporate gold rush. Data centers instantly became the most prized asset class on Earth. To understand how warped the market became, look at the shoe company Allbirds, which recently saw its stock rally a ridiculous 580% simply by announcing a pivot to leasing AI data center equipment. The industry's thesis was dangerously simple. AI gets smarter with more compute. Compute requires data centers, therefore build data centers at all costs. In the US alone, the number of AI data centers skyrocketed from essentially 0 a decade ago to over 5,000 today. The sheer speed of this build-out has been violent. More capital has been committed to data centers in the last 6 years than the funding for the Marshall Plan, the Manhattan Project, the Apollo space program, and the construction of the ISS combined, with $120 billion left over. And yet, this monumental financial bet rests on an incredibly fragile business model. High-end AI chips, or GPUs, rapidly become obsolete, requiring incredibly expensive replacement cycles. While AI models like Claude or Gemini are undeniably impressive, the broader industry has yet to prove it can generate the sustainable, massive profits required to prevent an eventual funding collapse. At its peak, more than 2 massive data centers were being greenlit every single week. States like Virginia, Texas, Georgia, and Arizona rolled out the red carpet, offering billions in tax incentives. Texas handed out over $1 billion for OpenAI and Oracle's massive Stargate campus in Abilene. Politicians promised a new digital industrial revolution, bringing thousands of jobs and prosperity. But the reality on the ground has been entirely different. The economic promises made to local communities have largely failed to materialize. Because tech giants receive massive, long-term property tax abatements, local governments frequently bear the burden of upgraded infrastructure without seeing the tax revenue. In Oregon, local schools lost an estimated $275 million in potential funding due to these tax breaks. Furthermore, the promised employment boom is a myth. Once constructed, even the largest hyperscale data centers require fewer than 150 permanent workers, employing about as many people as a local Walmart. Meanwhile, the environmental and physical toll on ordinary citizens living near these facilities is devastating. In Virginia's Data Center Alley, residents are now breathing the exhaust of an estimated 10,000 backup diesel generators. In Utah, an approved 40,000-acre AI campus was projected to expel a heat equivalent to 23 atomic bombs into the surrounding valley every single day, sparking furious public backlash that forced the project to cut its size in half. Globally, the UN estimates that data centers will consume as much water as 1.3 billion people by 2030. To keep these processors from melting, massive amounts of water are cycled through cooling systems, treated with chemical additives like PFAS, forever chemicals that cannot be filtered out by standard municipal water treatment plants before returning to the ecosystem. The sheer physical scale of these new facilities is difficult to comprehend. Meta's new data center footprint in Louisiana is nearly 400 times larger than the first data center it built for Facebook. Spanning an area equivalent to 1/5 of Manhattan, this single facility is on track to consume 5 gigawatts of power. That is roughly equal to the average entire power demand of the City of London, all for one single tech company's infrastructure. So, why is this multi-billion-dollar train coming to a halt? The answer lies in a convergence of physical bottlenecks, starting with power and supply chains. A single modern AI data center can consume as much electricity as a city of 200,000 homes. The latest GPU racks running frontier models require exponentially more electricity than traditional cloud servers. Shockingly, climate intelligence data shows that roughly 25% of the data center projects planned for 2026 haven't even disclosed how they intend to secure their electricity. Even if you have the power, you cannot build a data center without specialized electrical components, high-power transformers, switchgear, and industrial batteries. Right now, these components are in critically short supply, and the United States is almost entirely dependent on importing them from China. High-power transformer imports from China surged from 1,500 units in 2022 to over 8,000 in 2025. With geopolitical tensions and tariffs escalating, this critical supply chain has become incredibly fragile. If a single transformer is delayed, the entire multi-billion-dollar project stalls. Simultaneously, the hardware rush has thrown the consumer electronics market into chaos. In 2026, AI data centers are devouring roughly 70% of the world's total DRAM production capacity. Because of this, standard 64-gigabyte consumer memory kits skyrocketed from $190 to over $700 in a matter of months. Ordinary citizens are paying the price for this resource grab on their monthly utility bills. To fund the massive grid upgrades required by tech companies, utility providers are hammering consumers. In Georgia, power rates jumped 24% after 6 consecutive rate hikes. In Oregon, electricity bills have spiked up to 50% since 2020. Everyday families are opening their mail to find power bills that look like second mortgages, effectively subsidizing the infrastructure of Silicon Valley billionaires. Unsurprisingly, the public has had enough. The assumption that communities would quietly absorb the noise, the pollution, and the financial burden has completely collapsed. Data center cancellations due to local opposition quadrupled. At least 25 major projects were completely scrapped due to community pushback, and that resistance is formalizing. Recent polling indicates that 65% of Americans now oppose data centers in their neighborhoods. Maine became the first state to pass a comprehensive statewide ban on new data center construction until late 2027, with over a dozen other states considering similar legislation. Even outside the U.S., the resistance is growing. In Australia, which is aggressively positioning itself to be the world's second-largest data center hub, a projected quarter of Sydney's drinking water will soon be required to cool these facilities. Analysts warn that these projects will consume more new electricity over the next 15 years than all of the country's homes and electric vehicles combined. In response to this immense public, financial, and supply chain pressure, the tech titans are quietly retrenching. Microsoft has quietly canceled or deferred up to 2 gigawatts of planned data center capacity globally, citing an oversupply relative to actual demand. The highly publicized Oracle and OpenAI Stargate campus in Texas has quietly stalled its expansion. The hyperscalers have burned through their cash reserves and are now turning to heavy debt financing, issuing billions in data center bonds. Alarmingly, many of these bonds are rated as safe, low-risk investments for pension funds, yet they are paying junk bond-level interest rates of up to 12%. It is a haunting echo of the structural risks that preceded the 2008 financial crisis. This physical wall means AI companies face a very real growth ceiling. If data center construction remains constrained by supply chains, community bans, and failing power grids, the sheer computational power available to companies like OpenAI and Anthropic will plateau. So, what is the alternative? Can data centers be built sustainably, or do we even need these megastructures at all? There are architectural innovations, such as subsea data centers deployed on the ocean floor, which leverage natural seawater for passive cooling. These underwater capsules direct 99% of their electricity straight to computing, avoiding the massive energy waste of traditional air-cooled facilities. But the more disruptive shift might be algorithmic. We are seeing a massive rise in highly optimized, localized AI models. Instead of relying on a centralized billion-dollar data center to process every single request, smaller models are running locally directly on user devices. Powered by the large unified memory architectures found in modern consumer laptops, an 80% solution that runs entirely offline could drastically reduce the long-term demand for massive corporate server farms. Data centers aren't going away. Long before the AI boom, they quietly and reliably anchored our global banking, logistics, and streaming networks. We fundamentally need them, but the urgent question we face today is one of proportion and accountability. Is raising electricity prices for working-class communities, straining water supplies, and burning through trillions of dollars worth sacrificing our local environments just so an algorithm can generate a meme or flood the internet with synthetic content? The AI build-out assumed infinite resources, infinite political compliance, and infinite community patience. None of those assumptions held true. The future of AI cannot just be about raw, unchecked power. It must be built on transparency, trust, and a return to physical reality. Thanks for watching all the way to the end.